You thought buying a home meant you were building wealth. You saved. You sacrificed. You finally got the keys. But what if I told you that very same home is now being used as the government's secret weapon to pay off its massive $37 trillion national debt? This isn't some late-night conspiracy theory. The Treasury Secretary recently went on national television and without flinching revealed the plan. And if you weren't paying close attention, you might have missed it. He said, "We're going to grow the GDP faster than the debt grows." Sounds optimistic, right? Here's the real translation. The government's going to inflate asset prices, including your house, to make the debt look smaller. But when asset prices go up, so do your property taxes, your capital gains, your cost of living. They're not growing the economy for you. They're growing the tax base for them. And you just became their golden goose. This strategy is more than clever. It's brutal. Because while your house may go up in value on paper, the real wealth isn't yours to keep. It becomes taxable, reassessed, and eventually unaffordable. And that's just the start. The home you own, the one you worked so hard for, has now become the government's ATM. And you didn't even get a PIN code. Let's pull back the curtain on how they're pulling this off. First, they inflate. They pump money into the system, often under the guise of stimulus or investment. That extra cash floods into assets, especially real estate. Suddenly your home's worth $500,000 instead of $300,000. Feels good, right? But that $200,000 gain isn't real. It's not more bricks, more land, or better neighbors. It's just inflation. But guess what is real? The taxes you now owe on that inflated value. You'll pay more in property taxes every single year. And when you sell, you'll owe capital gains on money you never truly made. It's like winning a game where the points don't matter, except you still have to pay the penalty. Then comes the reassessment trap. Local governments, eager to cash in, will reassess your home's value. That means even if nothing's changed, except for market prices, your property taxes double. Can't pay? They can force a tax sale. That's not theory. It's already happening across the country. And who buys your home at those auctions? Not families, not new homeowners, investors, often ones with deep political connections and a taste for distressed property. But it gets worse. Every time someone sells their home due to these tax pressures, the government collects even more. Transfer taxes, filing fees, and a reset on the property tax to the new higher value. They profit from your paying 3 times in one transaction. And let's not forget the role of banks. Your mortgage, once a simple contract between borrower and lender, is now part of a much bigger financial machine. Thanks to inflation and rising home values, banks can lend more against your property. More debt, more interest, and much of it flowing straight into institutions that help finance government spending. Your house is no longer just your home. It's a cog in the debt engine of the nation. If this sounds like an economic ambush, that's because it is. But don't think it's hypothetical. Let's take a trip back to the 1970s, a decade of inflation, asset bubbles, and sky-high mortgage rates. Home values doubled, sure, but so did property taxes. Mortgage rates hit 18%. And millions of families lost their homes, not because the market crashed, but because the cost to stay in their home became impossible. Sound familiar? Even now, we're already seeing the effects. Property taxes have risen an average of 30% in just the last 3 years. That's not tied to better services or schools. It's simply the result of inflated home assessments. The system is squeezing homeowners like never before. So what happens from here? Best case scenario, the economy booms. That means your home value skyrockets, the government pats itself on the back, and you pay even more in taxes every year. That's the plan they hope works. More likely, inflation keeps raging. Your house might be worth more on paper, but everything else costs more too. Food, insurance, repairs, gas. You're not richer. You're treading water in an ocean of rising expenses. And every year, they drain a little more from you in taxes. Worst case, the market crashes, but your tax bill doesn't. It's based on peak assessments. That means you could be underwater on your mortgage, struggling to sell, but still paying top-tier taxes. If you can't afford it, the government takes the property. Game over. Now you might be thinking, this is outrageous. But what can I do? That's where things turn around. You see, there's a way to not only protect yourself, but to win. It starts with understanding their rules and then playing smarter. First, challenge your property tax assessment. Most people never do, but those who do win about 60% of the time. Don't accept that reassessed value blindly. Ask for comparable sales. Demand justification. Every dollar you save is a dollar they can't steal from your pocket. Next, know your local laws. Many states offer homestead exemptions or caps on how fast your property taxes can increase. If you live in your home as a primary residence, you may qualify for significant protections. Don't leave that money on the table. Then, if you can, stop thinking like a homeowner and start thinking like an investor. Buy income-producing real estate. Use fixed-rate loans. Let inflation work in your favor for once. When you own rental property, rising prices mean rising rents. And inflation? It quietly eats away your mortgage debt, making it cheaper over time while your asset keeps growing. And don't forget about real protection, assets that hold their value when fiat currencies collapse. In Weimar Germany, people holding paper money were ruined. People who held gold, they survived. In today's world, you have more options. Physical gold, cold stored Bitcoin, even gold-backed ETFs. No one's saying, go all in, but hedge. Protect 5 to 10% of your portfolio like your future depends on it, because it might. And here's the secret weapon most people ignore: debt. Not all debt is bad. Bad debt buys things that lose value. Good debt, it buys things that make money. Lock in cheap, long-term, fixed-rate loans now, because when inflation spikes, you'll be paying those loans back in cheaper dollars. It's like time-traveling money. And the clock is ticking. You can also get creative. Seller financing, subject to deals, wraparound mortgages, even zero-interest business credit. Banks might tighten credit soon, but right now, you still have access. Use it wisely. Here's something the wealthy already know. They don't fear inflation. They use it. They borrow at low rates. They buy assets that cash flow. They defer taxes and hedge their wealth. While the average homeowner is being drained, the wealthy are gaining ground. Their properties leveraged, their taxes managed, their equity working harder than ever. It's not luck, it's strategy, and now it can be yours too. So what's the final takeaway? The home you live in, the one you love and worked so hard to afford, is now being used to stabilize a national crisis you didn't create. The government isn't asking permission. They've already started. Every inflated tax bill, every reassessment, every forced sale is part of a plan to paper over the debt problem with your equity. But now you know their playbook. And better yet, you have your own. You can either be drained by the system or flip it on its head. You can challenge your taxes, use exemptions, invest in real estate, hedge with gold and Bitcoin, and secure low-interest debt that turns inflation into your ally. The rules haven't changed, but now you understand them. So I'll leave you with one question. Will you let them use your home to fund their future? Or will you turn your real estate into the foundation of your freedom? There's no neutral ground anymore. You're either paying the price or collecting the rewards. Drop a comment if you're already seeing rising taxes where you live. Subscribe for more straight-up financial strategy like this. And if you want to see the one factor that could flip the housing market upside down overnight, watch the next video.